Very good morning to you guys. Hope you're doing okay. Yesterday was probably one of the most difficult roller coasters I've ever encountered in my fairly long career as a trader. I opened up a few trades and each one would take my stop out. So what's happening is that it's shaking people out of the trade, and so it's basically just being very erratic and trying to assess a direction. And now the trouble is that we should be seeing a flush out because retail guys are now long on risk assets, but they're actually adding to that bias now. So this is actually quite a bearish scenario that's brewing, and so really we should be falling on risk. But however, maybe they're going to get paid. Maybe the retail guys are going to get paid, and there's going to be fundamental things that are going to occur, and will go up on risk, and then there's simply these guys will get paid and probably get to their break even, and then they think, oh, I better exit. That's a potential scenario, but really this is a bit of an omen. Okay, so just bear that in mind. Last time it did this, we did really fall, and also it gave us a big heads up of the COVID 2020 crash as well, and they went that long for about a week, and then we just really fell, and so there's a little bit of an omen there. If we have a repetition of this tomorrow, that's just going to cement the deal, and it's going to be a bit of an omen, so do be careful. Yesterday was pretty horrendous for me. I had a very bad hit rate on my trades, so today I'm just going to probably be taking it easy. I've got one trade set up that I posted in the Telegram. If that doesn't go to plan, I'm taking the rest of the week off because I have to preserve my capital. I can't throw it at the market until we get a direction as well. VIX is also really high. You know, that's the level of interest, the yearly pivot, and we're well above the yearly pivot. Dollar is mega strong. A little bit uncertainty of the H4. Pound strength, which would agree with that bubble. See, we're a strong buy. Well, we're a buy on the pound. It needs to come down below 50%, be a strong buy. So there's that movement on the pound on H4, and there's the bit of euro strength on the small time frame. I think Aussie needs to reduce in size because it's too big for where it is, because they're long but they're getting paid. So that should be getting smaller. The bubble tells you price performance. So if they're long and the size is large, then price performance is going up. So it tells us the retail guys are getting paid. So that's a bit of an issue. I think yesterday they got paid on Aussie as well, so it's a bit tricky, but hopefully that logic is clear. So large bubbles down here and small bubbles up there because they're long, and then they're short down here, so we should see large bubbles and small bubbles up there. I think they're giving up on cross-yen shorts. Some of the pairs people were in 600, 700 pip drawdown. UJ, they were in 800 pip drawdown, so I think they've given up now, which is good because we needed to kick these guys out, these retail guys, and they're too stubborn. Really, that's just very unusual. That's not sheep behavior, that's ape behavior. They're just stubborn. So we might be in the process of finally eliminating the apes, and we want the sheep back because the sheep are easier to herd. Apes just they run amok and they're really hard for sentiment. Sheep, we can use those guys as contrarian material, but when the apes come into play, we can't really use as contrarian material because even though they're counter trend, they're going to hold on. Their risk management is terrible, so they'll just hold on and hold on and hold on. So what normally happens, we see liquidity probes and reversals, but if they're not getting liquidated, then we're not going to see a reversal. And this is why the retail guys are at fault to what we're seeing. It's all this volatility. The sheep reverse and get scared, making sentiment much easier. The apes, they're stubborn and they make it very hard to assess direction. So here's the retail apes. Even though we dropped really aggressively in a very scary fashion, they held on to their bias. In fact, they bought the dip. And then they bought the dip again. So they're actually 68% long, so that's quite a heavy bias now. If we come up, it's going to be a big payday for these guys. But like I say, maybe it's going to come up and just they'll get paid, And we've got the CPI data as well. Read it, guys, but I'm not going to rant today. I did a rant last Friday and the video was quite long, so I'm not going to do it again, but basically this is what's going on, and this is why we're seeing the shakeout volatility. This is why we're seeing such big moves. We need to get these guys out of the equation, and I don't know if we will. If they're going to hold on, it's going to be very tricky. So be careful. I think maybe if my plan doesn't come to fruition today, I'm going to take the rest of the week off. I think I'll take Thursday, Friday off, because I've got better things to do than waste my money when things are just chip chopping around. This is so on gold. At least that's a bit cleaner. You see how erratic that sentiment on S&P. And the S&P is doing much smoother, which is what we should be seeing on anything, not this crazy, volatility. So there's the sell because they went long against the 21 moving average. You'd wait for that line to deviate from the average line, and then you'd enter. So it's a fairly decent result there, had you recalled it. So that's that. Treasury yields, no inversion, and they are coming down at the long dated perspective. That was a lot higher. That was 3.26 yesterday. So that got pummeled down, which is possibly a risk on sign. So maybe the apes are going to be right, maybe. So now this coming down is going to be possibly a risk on indication, but we'd need them to come down quite a lot still, and there's no inversion, which is a good sign. AJ is our best bet at 74% correlation. UJ is negatively correlating, so don't look for UJ for US 500 direction. It's going to do the opposite. So yesterday it was behaving well, and today it's been naughty. So don't look at UJ and think, oh, we're going to be doing risk on or risk off. It's going to do the opposite of what we should expect with its peers. If we're risk on, these should do quite well. Okay. UJ is out of bonk, so that's that. There's some healthy signs, that where it might be risk on today. Keep an eye on that China. Perhaps it did the thing last week where it was up 5%, but it just simply didn't budge at all. So that was quite a good risk on indication. Risk appetite is healthier today. Stop loss cluster update. Largest move was Euro Oz at -4% towards buy. There's that movement there. And largest stop loss cluster is AU, which is that bit sticking out. Location above 0.6991. Size is 4.58. It's still large, and there's a lot of liquidity there. If we're going to be risk on, we'll probably go and grab it. So that's the level where they're going to be targeting in order to take stops. Okay, and Aussie should be coming a bit smaller. That should be reducing in size from where it is. Okay, no signals yesterday. Recommended to simply watch the Euro Oz. It didn't pan out as expected, so it was a good job we just monitored it. And I've got a setup where this could be a good short is the Euro Oz, but we'd need risk on, so we want to keep an eye on the S&P. And if the apes hodl, it might not pan out because we still need to flush these guys out. But there's the SL on TP, and it's a decent R if we ever get to that TP. But you can see why it's resistance. There's the the A level of the harmonics. There's X, A, B, C, D. D's the sell, and that's going to be a support. The body is of note. That's a good level to monitor. So if we do come up, that area there would be a good short. This is like the body of the harmonics. That's a key level. So if this doesn't go to plan, we get stopped out, it might be a better short at that B level here. So hopefully that's clear. Eyes on CPI. Today is like yesterday. I will be taking the rest of the week off. So yeah, that's just what I'll do, because it was ridiculous yesterday. My hit rate was abysmal, and it worked out for one of the Quasidb guys. He was stubborn, and his stops were quite wide, and it panned out for him. But I can't afford to have these wide stops any longer. So I need to, you need to have good risk management. But it paid out yesterday for being stubborn and having wide stops. So this one is fairly wide. But what I recommend, because it's so wide, is that you use a very reduced size. So perhaps if you're used to like 0.1, just use a 0.05, like half your risk, and then you should be okay. And that was my cat there, so you probably would have heard her. So I'm going to wrap up now. See how we go today. If we get stopped out, I will be doing the bulletins tomorrow and Friday, but I won't be trading. And then that's that. So have a good one. Keep an eye on this. I don't know if you've got access to this trading station, but you should have. It's free. So keep an eye on this. I think they're going to get paid. So be careful, and I'll speak to you soon.